Hello again, we continue with the second part, explaining the Andrews Pitchfork tool and how to trade it on financial markets. In this case, or the first part was dedicated to the places or where to put the 3 points, because it's very important. And this part, we will go with the details regarding what the tool shows and how to interpret the market with the Andrews Pitchfork tool. First of all, each point, each pivot is or represents the starting point of 3 parallel trend lines. The most important trend line is the one in the middle, this one. This one is called the median line. Let's write here. All this info, you have it on the articles that come with this analysis, the median line. Now, the median line is the most important one of them all. This one is called the upper median line, of course, because it is above the median line, and this is the lower median line. Why is this the most important one? Because it is said that it attracts price. It has the characteristic of attracting price. Now, keep in mind why this vertical line stands here. It stands here because from this moment of time, so way earlier, at this moment on, we didn't know the future price action. So from this moment on, following the rules of applying the pitchfork, we knew this pitchfork here. But we also knew that according to the median line characteristic, price is attracted to the median line. And the moment that the market broke, the series of a higher high here, and then a lower high, and then a higher low, and then higher high, the moment that it broke it here, it opens the gates for what? For testing the median line. Well, it didn't test, it failed to test it here, but the bounce didn't break the series, and therefore the chances were that on the next move lower, it will go all the way to test it. Now, some traders go aggressively on the short side by the moment that price hits the upper medium line, but that's risky, and I will explain here a bit why. Other traders wait for these lows to get broken before going for the median line, and they place a stop loss at the upper medium line, and then wait for the market to simply go for the medium line. It's still a very nice risk-reward ratio in the sense that you have this is the risk, and then this is the ratio, the reward, so it goes with something like 1 to 1.5 or maybe even 1 to 2, which is a great trade to consider. The thing is, what you do when the market reaches the median line. Here, in very strong trends, the market will have the tendency to sit between the median line and the upper median line, all the way to here in very strong trends. How do we know that the pitchfork that we drawn is correct? This is something that I explain in the 2 articles as well. Well, that's very easy. By the moment that we know how to place the 3 pivots, by this moment on, we go back in time and check if the median line indeed had the power to attract price. And we see that it did. Here 1 time, 2 times, 3 times, 4 times, 5 times, then broken, almost coming back to it. So it has this, let's say, deja vu with price, and eventually this comes as the forecast. How do we know that the trend is over? That's very easy. The so-called Schiff line is drawn by connecting the start of the pitchfork or the P0 with the end of the pitchfork or the P2, as we explain in the article. And you simply draw this trend line like this, projected on the right side. And as a rule of thumb, this goes valid also as a dynamic resistance or support and resistance. You know by now, or you should know, that dynamic support and resistance is more powerful than classic support and resistance. And then the classic support and resistance appears on the horizontal, while this one has a certain angle. And therefore, the moment that the market broke here, came to the upper medium line, hesitates a bit for a few days, maybe even a week or 2 weeks. Remember, this is the daily chart, and then breaks higher, retests it, and goes for the Schiff line. From the moment that the Schiff line is broken, it implies that the whole trading system or pattern has been invalidated. From this moment on, we can go on, wait a bit for the market to form the series of the series corresponding to a bullish trend, and then to try to project the bullish trend on the right side. What was the right trade to take here? The right trade to take was to, let me take an arrow from here, was to go short by the moment that the market broke the series of higher lows. And then for the most courageous, go short by the moment that the market tested the upper medium line with the stop loss at the Schiff line. Remember, that's the absolute invalidation, with the stop loss at the Schiff line. Now, you got to give it a bit of room at the Schiff line. You don't go by exactly the pip or the point. Give it a bit of a room to avoid swings characteristics on financial markets. Then the market goes and beautifully breaks or reaches the medium line. This is the absolute take profit. Some traders use the medium line as a bouncing potential. See here it acted as a resistance. From the moment that the resistance was broken, the medium line acts as a support, as a dynamic support. One time, almost second times, but two times here. Well, that would be a very nice place to go long for what? For the upper medium line. And then to simply wait to see if the price has the power to break the Schiff line. This is how to use the Andrews Pitchfork. It is a very not easy to use, because the process of identifying the three places for the pivot point is not that easy, but it is a very straightforward and simple approach. It eliminates emotions, it eliminates everything. It's pure market geometry, and everything depends on the median line and how you place the three pivots. Make sure you read the articles that come with these two video analyses. Bye-bye.